I guess we'll get going. Good morning. Welcome to Forex.Today, the YouTube community of more than 21,500 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. So, hey, welcome to my office. My name is Wayne McDonald. I will be your guide on this journey we call Forex. But we can cover the stock market and the bond market and the commodity market. You like gold, oil, Bitcoin? We can do all that. That's all good in the hood. But anyways, I am a humble servant, so I'll let you be the boss. Let me know how I can help. Is it technicals? Is it fundamentals? Is it psychological? Yeah, so we can cover all of that. Just let me know. But at 7:30, ooh la la, we have CPI. And CPI is going to help us predict whether the Fed is going to cut interest rates on Wednesday of next week, but more in particular, what is called the glide path, what I call the neutral rate, but whatever, we can discuss all of that. Cool. So that's that. So right now we have the Squawk Box running. You may have heard it while you were waiting for the beginning of the event. It's very cool. What we do is it gathers all the headline news that's coming out like right now.
Euro-US dollar remains moderately weak with the ECB. US inflation on tap.
Yeah, so we got this little ECB thing. They're not going to do it. We're really more interested in the CPI. Yeah, I mean, the ECB meeting, what? Really? You guys want to watch the ECB meeting, or do you want to prep for CPI in the United States? You let me know if you're like, hey, I would rather watch the ECB meeting. Okay.
European
We
Central
could do
Bank
that.
set to hold interest rates amid resilient Eurozone inflation and growth.
Yeah, of course. So, see, that headline just came out. Yeah, European Central Bank set to hold. Yeah, great. So, fine. But that's 41 minutes from now. Who cares? Cool. Yeah, we have claims coming out too. Sure. But CPI. We can look at the radar and say, hey, does CPI in the United States create volatility, and is there a reliable, repeatable pattern? Yes, but remember, this goes back, uh, uh, in time. Back in time, CPI was CPI, inflation was inflation. Yes, we were worried about inflation, but it may not have had as much of an impact as it will likely have today, because today is a decision of, are they going to cut by 50 basis points or 25? I don't think that's a valid discussion, but it's a discussion. So I guess that's valid. But I don't think there's a chance in heck for that. I don't think it's warranted. That's the thing. So we can go through the fundamentals and we can discuss that. But some of the market is betting on 50 basis points. I think the thing they should be debating here is that is that what is the neutral rate? Is the Fed going to cut 3 times, 4 times, 5 times, or only 2 times? And that's what the media means by glide path. What economists call that is the neutral rate. Well, when will they stop? The glide path is kind of like when will they stop and how fast we'll get there. So I think at the beginning of the year, I said a cut in September and a cut in December, no cut in October. Right now, the market is pricing in a cut in September, a cut in October, a cut in December. And I think that's great. Yeah, Sky Killer just points it out right then and there. Some are betting on 75, and I'm like, no, I don't know. Why? You have to ask yourself, why would they do it? Not that they should, or you want them to, or you guess, or and I can't quantify it. You know. So anyway, so if it comes out greater than expected, what has happened in the past? Aussie dollar often goes up, euro dollar often goes up, pound dollar often goes down. What? That's weird. Kiwi dollar goes up. Yep. USD Swiss franc goes down. See that because we switch from the denominator to the numerator. So the correlation, you would expect inverse correlation, and that's perfect, right? That's perfect. So the odd one out in this scenario is pound. Pound is weird. So maybe stay away from pound. And if it's less than expected, up, up. Again, pound going the wrong way. That is interesting. And wait, and no Swiss franc. Notice that. No Swiss franc. Now you're like, well, why is there no Swiss franc? Well, either it has not in the past provided volatility, but I think it would have since everything else did. So why is there no Swiss franc? Well, when you look at all the times in the past in which we did US CPI and the number came out less than expected, in that scenario, there's no reliable, repeatable pattern for trading USD Swiss franc. Sometimes it goes up, sometimes it goes down, sometimes it goes sideways. So you should probably skip it in that scenario. Huh. And then as expected. Dollar strong, dollar strong. So dollar strong if there's no surprise. Dollar weakness in other scenarios. It's just what you trade is different. And then either way, pound does something strange. So, I guess our best case scenario here is if it comes out greater than expected. Now, what does that mean to us? Well, that means the Fed won't cut in October. How about that? But if it comes out less than expected, they could. I still don't think they would, but they could. Yeah. And the other thing we've learned quantitatively is no matter what happens, don't trade the pound. That's weird, huh? Why? I don't know why. Yeah. No, no, Emerald. We're all of today is about October. So once again, we're not talking about the Fed doing anything today or tomorrow. That's next week. What we're talking about is what's being priced in by the market. The market is already traded next week's cut. If you haven't put that trade in, then why? Everybody else has already done the trade. So now we're like, we're not interested in that. That's already been done a while ago. Like, for example, let me prove that quantitatively, right? Um, mm, mm, mm. Okay. There is 100% chance the Fed's going to cut on Wednesday, according to the Fed Funds Futures Market. And it's not a survey of opinions. Okay, it's literally the price of the contracts they've negotiated with each other over trillions of dollars. It's already happened. They're already doing this. It's already priced in. We've already done the trade. So that's the thing. Like, if all y'all are waiting to put the trade in, the trade has already happened. What we're talking about today is October 29th, and there's a huge chance of a cut. Okay, from four, right? From four and a quarter. I always go by the upper bound. So 4.25 to 4. Now I think we're going to 4, but not till December. But hey, right now there's a huge, like more than 2/3 of the market are pricing in a cut in October. Yeah, as Sky Killer points out. I just happen to not agree right now, but whatever. It doesn't matter because this is not an opinion by the market. They've already made the trade. Then we can go to December. And a huge chance that by then we're at 3.75. That's what's being priced in. I think we'll be here, but whatever. I'm a minority, right? So that's fine. So, yeah. So this is just vol around the news. But the best case scenario for us today, if you want like risk on, you want the stock market to go up, is falling CPI, and that would. So we have services, we have durable goods, and then we have all the other crap. And inside of all the other crap is the most important is energy. You know, oil, gasoline, electricity. And a lot of those things are down. I don't think services are going to be down. I don't think durable goods are going to be down. But that energy has gone from $75 a barrel and down to 60, 65. So I think that's going to be calculated where we've gone from 75 to 65 for oil, and that could cool off some of the headline. No, that's why you wanted to score, but whatever. I think that's what we could see, and it could come out less. If it comes out less, the logic is October might be on the table. The cut in October goes to a stronger maybe. But if it's high, it goes to a stronger probably not October. You see, we're already the next meeting. Yeah. And so we could say, okay, let's say it comes out lower. Don't trade pound. It doesn't make sense because, or Kiwi. What? It's strange. So it looks like Aussie's probably our best bet right now, right? Because Aussie's already hot to go HOTTOGO. 75% in the past goes up. So there's our trade plan. If actual is less than consensus, 75% chance that the 2-hour trend is up. So let's focus on that scenario. So if actual is less than, we'll click here. Show us those scenarios. All right. So here's the trade plan in that case. Buy a dip, let it rip. Okay. Here we go. And ooh, the page is yip gimpy. Interesting. Sorry about that. Look at that. The scroll's gone. The scroll is gone. What the hey? His scroll is gone. Oh, dang it. So I wanted to see in the past. Uh, you can see we had a spike and drop and still close lower, but it looks like back in January it was a spike. Scroll is gone. Interesting. All right, well, I'll have to try to find time to fix that. Oh, I remember. I had to update because it changed. All right, I know why that happened. I'll see if I can fix it by Monday. I'm not going to have time today. Today is crazy. Interesting. Yeah. All right, so I'll put that on the to-do list. Scalping radar. This is if you didn't have a lot of news events going on, this would be the page that you want to look at. And it's really just, support and resistance trading, breakout trading, and all of that kind of stuff. And that basically comes down to that's why it's a scalp. Most of these are really smaller trades. They're already in play. You know, high chance it goes back to resistance. If it breaks, there's a high chance of this. And if that breaks, there's a high chance of that. Okay, fine, but they're usually really, really small. And then here's the thing, you still have to put this in context because it's pattern recognition. These things might be happening. However, with important news, both the ECB and CPI coming out imminently, the market might be frozen. Wow, a technical pattern doesn't understand that. It's just that's the pattern. That's that. That's the observation. But it doesn't say, oh, wait, these two important risk events are coming out and maybe nobody's going to make any trade. So I'd say for now, forget about it. Yeah, forget about it. Forget. We do know it's the right time to be trading. That we do know. But notice how when we look at things like the Euro Swiss franc implied volatility, normally we're down here or up here by now on Thursdays at this time of day, which I can confirm is the best time of day for trading Euro Swiss franc, but it hasn't done anything. Well, that's because Euro Swiss franc is waiting for the ECB meeting. So maybe you should be trading pound yen. If you were a bull, okay, yeah, yeah, yeah. You had a good opportunity 5 hours ago, yeah, right around here at the 4 hour implied low. So now your target is by tomorrow 201. Now, if this is implied volatility, does it understand anything about psychological prices and stuff? No, it's no. There's no pattern here. There's there's no AI per se. This is just implied volatility calculation. Non-directional, just implied vol. It's just a basic calculation. So, okay, I think general technical analysis says this will be the top 200 and a half. And then this is the next wave tomorrow. So 24 hours from right this second, we could be at 201. Well, the problem is we haven't broken 200. Yeah. And so I don't know if it's a pivot point, and I don't know if we've done this in the past. That's technical analysis. It's just, like, hey man, that's a bit of a psych level, don't you think? So we're going to stay away from pound dollar today, but it is moving down. Okay, it looks like about 6 hours ago was the right time. Yeah, right about there. Yeah, right about there. So you can kick it off the moving average, or you could kick it off the 1 hour implied high, but that's a million miles away. So That ain't likely to happen. But we do want to focus on Aussie dollar, right? On Thursdays, right now is a great time to be trading. Are you a bull or a bear? If you're a bull, okay, this is the implied low, at, right? Where we'll likely be in 4 hours, where we'll likely be in 24 hours. If the market moves bullishly based on what Aussie dollar does on Thursdays on this time of the day and throughout the day. So, for example, this is a good time to trade Aussie dollar. This is a good time to trade Aussie dollar. And this is a pretty good time to trade Aussie dollar. See that? Why? Well, because you have that, and then you have that, and then you have that. That's an increase in volume and volatility. So from this analysis, and this is only on Thursdays and only Aussie dollar, but this is when volume and volatility increases and then it wanes. Then volume and volatility increases, then it wanes. Then volume and volatility increases, then it wanes. Which tells you if you trade Aussie dollar at the London Open, you're about 3 hours late. And most people are getting out of Aussie dollar at that point. Why? Asia's closing. See, this one to the right is Asia Open. This one to the left is the Asia close. Oh, and Europeans probably trade European currencies because it doesn't look like a good time to trade Aussie dollar at the London Open because they're probably doing pound and euro. So we would see that in our analysis. Oh my goodness, it's so beautiful, isn't it? Yeah. And typically I would use our AI right now to just read all the articles and give us an overview of, hey, what's going on with gold? What does the market think about gold? But once again, sentiment is likely to change in a few minutes, so there's not necessary. But just so you know, this week, I've read 74 articles on 5 different websites about gold. And I know, since I remember every single one of these articles, the tone of the sum of the aggregate is the market's pretty positive on gold right now. Cool. Well, when it was down here is when I was buying. Because this is how people feel. Okay? I had my emotions removed at birth. So I had quantitative analysis that told me I should logically be bullish gold, even though everybody hates gold right now. I'm like, that's perfect. I'll buy it low. And that's exactly what happened. But you got to have a fundamental bias for that, yo. Huh? Got to have a fundamental bias. So what's going on in the fundies? Well, we'll see if we can break down CPI in a second here. But yields are down. That's great. Oil's down. That's great. Oil is paused. It's down, but that's a big number for gold. S&P 500. Look at that. Well above 65. Yeah. See, what would happen is we'd get near 65 and then it would not close above 60. It'd get near 6,500 and then not close. And then not long ago, for the first time, it closed above 6,500. And that was a big deal. Now we're going to open at 65.32 on our way to 66. And you're like, oh my goodness. That's nice. Dollar bill should be falling. You want weak, not strong. We want to stay below 98. If this gets above 98, it's most likely CPI is very high and the Fed can't cut as much as has been priced in. So you'll have to price out those bets, which gives you dollar strength. Stock market comes down. 10-year T-note yield goes up. Bitcoin at 114. Nice. Here's our bullish hit list, our bearish hit list. Yeah. Okay, let's jump into the risk gauges. Looking at 3 time frames here. Very, very bullish now on the monthly observation. Why? Well, when you look at the stock market, it's up 2.5%. That's great. Dollar is weak. That's great. Yields are down on the short term. That's great. The yen is flat. All right, whatever. Gold is way up. Well, why? Is it aggregate demand or is it hedging of inflation? I still have it scoring as hedging of inflation. Inflation is still too high. The only thing that's good right now is GDP is higher than CPI or PCE. But if that changes, then my gold is going to rip. So right now, I'm saying gold is way up. And I'm going to score it as not good, but you can do whatever. If it's aggregate demand, then you would score it good and we'd be at a bigger number, right? We'd be at 7 and not 5, but whatever. I still have it as a concern. Long-term yields are way down. That's great. Volatility is way down. That's good. And when you look at 1 million options contracts, yeah, they're bullish, man. They're bullish. Game on. So all that is good. This is week over week. It's okay. This is, today, yesterday. It's fine. But looks like risk on because that BLS revision makes people think the 3 cuts this year. Again, I'm not really in that camp, but they're all going in the right direction. So, but this sets us up to be very disappointed. If they're betting on 3 and I don't agree with it, I'm like, I don't see here. Why do you guys see 3? Well, I can't talk to them. I only know what they're doing. So if I'm right, people are going to be disappointed somewhere along the line. And when dollar should be weak, it'll suddenly be strong as people realize it's not 3 cuts, it's 2. So pricing in weakened the dollar. And I can tell you the dollar's weak. So suddenly it becomes stronger, right? Yeah, but whatever. We'll get there when it happens. Now, going into the market, the news is not far away, both ECB news and our CPI. And most of this observation is sideways, which means nothing's happening. We have a couple of outliers here, a couple of outliers here. Fine. Yeah. And so it just tells us the market is neutral going into the news. And it should be, really. Why would you be betting otherwise, right? Okay, we got down to the psych level here, huh? 3.5, and now we're holding. Okay, this is the 2-year yield. This shows us that we're absolutely and relatively risk on, but you can see the pause, this recent pause here, indicates that we're waiting for this. Doesn't even matter. Like CPI coming out today is going to move this. We just don't know if it's up or down. You want down, but the Fed can't cut. Fed can't cut. If we have a monster red hot CPI that takes us down from 3 cuts to 1 cut, oh my gosh, this is really going to move to the up. That's bad. Oops, I clicked the wrong thing. Okay, there's our heat map. Nikkei, Bitcoin, copper, gold. Aussie's been just ripper strong. CAD has been ripper weak. So all these things are in play. Options market. Yeah, bullish but waiting. This is exactly what you would expect. They're bullish. They're absolutely bullish. They went relatively conservative just the other day, but at precisely the right level. At precisely the right level. I mean, we track this every day. And so what this tells us here, okay, let me do this. Okay, you see this level here? Seems to be important, don't you think? And then what about this level? Seems to be important, right? So there's our range. But what does it represent? Well, an uptrend, so green is up. You're like, but it's on the bottom. It's the put call ratio. Calls are bullish and put call. I didn't name it this. This is a thing. All right, but anyways, the put call ratio. What's it telling us? First of all, the trend is up. So what is this up and down, up and down, up and down? Well, if you're going to do a price time series, right, then we know an uptrend looks like this. And that's exactly right. Okay. Higher, right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay. Are we going to do this? No. That's not likely to happen. Almost never happens. But it just shows you lower, higher low, higher high. Higher low, higher high. Higher low, higher high. Higher low. So it just happens to look like this. That's the buy lows idea. Isn't that cool? But traded by options traders. What's this? Hedging. Yeah. Uh-huh. So something happened around the end of July. Does anybody know what happened at the end of July? What was happening at the end of July, early August, that had the entire options market, more than 1 million options contracts, and suddenly it was technically risk off? It's for you to figure out. Positioning we don't have to do today. You probably already know it. This will update at 3:30 on Friday. Well, no, not seasonality, although because of this event, sort of, but not really. What was it this year that made the market, which almost never is in the red zone, suddenly was in the red zone? It was logical. Okay. All right, the ECB is not going to cut. Isn't that nice? They already told us. Okay. So the next meeting they're going to cut. Oh, okay. Where did we get this information? From the ECB. Oh, well, that's good to know. I know, right? Good to know. Seasonality, I don't think we need to go through. We can go through some scorecards. So CAD has been very weak. So I suppose if dollar gets strong, which would be the scenario of inflation being much higher than wanted, that takes out a price, a Fed cut that's already been priced in. So to price out one of the Fed cuts from high CPI. You have to buy your dollar short positions back, which makes the dollar appear to be strong. If the dollar is strong today because of the reversal of capital flows, USD CAD up might be one of the best trades. It's seasonally is usually bullish this time of year, and the chart is bullish, not very bullish, but bullish. Now, on the flip side, the market might be shocked the Fed didn't, or the ECB didn't cut. I mean, we've known for months. I mean, again, we pull the data right out of the ECB. I've spent 10 hours at Eurostats in the last 2 weeks. You know what I was doing last night? I'm sitting by the pool. The sun is setting. I'm still drinking coffee. I'm smoking a fabulous cigar. Right? Sitting by the pool, enjoying life, living large. Got my laptop on my lap, sitting in an Adirondack chair, and I'm going through tables and tables and tables and tables of data at the Japanese central bank, the Bank of Japan. I'm in their data sets, going from series to series, to data set to calculation to calculation. Spent hours inside the database at the Bank of Japan. This is what sexiness is. If you're a Forex trader, you're like, oh, that's hot. Oh, yeah, smoking hot like fire. That's the kind of research I do. Isn't that cool? But, so going back to what we were saying, now the ECB could do whatever they want. The governing council could just say, you know what? Let's just go ahead and cut early. Yeah, they could. But what they've told us up until now, and when I mean told us, I pull the data out of the ECB. It's not like they call me, hey, Wayne. It's not like you listen to news or something, or it's not like you use AI and you say, hey, listen to all the speeches given by the members of the governing council, and then give me an aggregate score of the sentiment of what the speeches seem to indicate about the future rate of interest rates. No, I'm literally going into their database, pull the numbers out, and they said they're not going to cut at this meeting. They're going to cut at the next meeting from 2.15 to 1.9. It's either at the next meeting or the meeting after that. So it could be sort of the October-December period. That's all I know is what they told me quantitatively. Don't let me forget the time. I don't know what time it is. What time? Where's the time? Phone. Huh? 8:08. Oh, we got tons of. Oh my gosh. Cool. Now, we could break this into individual pieces, or we could do like gold and do the deep dive. So here's what I was talking about before. Gold has been bullish for a while. I can prove that. Let me prove it. This talk is cheap. Yo. All right. So we've been bullish for a long time. We've been very bullish. We were moderately bullish and then very bullish. But we've been bullish. Nothing but bullish. Now, when we go to this other tool that we have, and I did training on this before I bought
OPEC
gold.
sticks to oil demand.
You go here, and this is the measure of how the market feels. This is exactly what I was talking about before. Read all the news about gold, understand the context of all the articles, aggregate all of that, create a score from positive to negative, and then track it over time. A week, a month, 2 months, 3 months. Okay? Wow. Okay. So we do have AI that does that. If you thought that was cool, yeah, we do this all day, every day. But what I'm trying to point out is, since we can track this over time, at the end of August, you see around the 19th and 20th, our score for gold was waning. It was dipping down. It was. I remember that. And then we get down to here, and I mean not this score, the scorecard score. Then we get way down here, and the market feels terrible about gold around the 25th. Okay? They don't like it. Negative 25, negative 30. Okay? So here's that little dipsy-do we had in the sentiment toward gold. Something happened in the fundamentals. And then somewhere around the 20th, 21st, the fundamentals changed again. Yeah, well, that's called news. News comes out and they're like, oh my God, the Fed's going to cut, gold's going to go up, the dollar's going to weaken, whatever. You see? So we go from very bullish to concerned to bullish again, game on around the 21st. But the media on the 21st was bearish, neutral, because that news came out again, and then they were still bearish. Do you know why? Gold hadn't gone up in price yet. The media is behind. The media is lagging. The media will write good things when it's going up. They'll write bad things when it's going down. But it tells you that that journalism major has no frickin' clue of what they're doing. And so you're reading all these articles and you're like, well, you know, such and such a website says gold is bad. You're like, really? That's how you make your decisions? But apparently that's how it works. So what I'm trying to say is, when this was happening, and in particular right here, gold was becoming more and more unfavorable, despite it logically becoming a better opportunity to buy. So I bought that. And now guess what? Now that I own it and it's going up, everybody loves gold. Yeah. So I have to have my quantitative data that says here, gold is bullish and the market is not aligned properly. It's how they feel about gold. Well, I don't feel about gold, I think about gold. You know what I'm talking about? So it's nice to have data to know, like, the ECB is not going to cut. I mean, they could, but they told us they wouldn't, so that's all I know. Okay. In fact, that's probably out now, huh? 1 minute.
The
Oh,
U.S. dollar
good
is
timing.
modestly higher. U.S. yields are higher, and stocks are higher ahead of CPI.
OPEC.
Cool. Let's wait 58 seconds. Thank you, Denise. Yeah, and TRADARS, sorry for this morning. I woke up to the dreaded update from Microsoft. A little glitchy, and I just didn't have time. And I'm like, you know what? Let's go here. Different software. 23 seconds to nothing. But, they can do whatever they want. That's the thing. They can do whatever they want. But they told us no. Inflation is 2. Rates are 2. Everything's fine. Remember, Lagarde told us she fixed everything. Nothing to worry about.
Silver price forecast. Silver, U.S. dollar, consolidates near $41 ahead of U.S.
Nothing!
CPI.
Nothing.
The U.S. dollar is modestly higher. U.S. yields are higher, and stocks are higher ahead of CPI.
Let me take
OPEC sticks
Let
to
me
oil
take
demand
30 seconds.
forecasts,
Be right back.
Says economy doing well. Dow Jones, DJIA, technical, poised for a potential bullish breakout as U.S. CPI looms.
Brazil retail sales, MOM, in line with forecasts, 0.3% in July.
Mexico industrial output, year over year, came in at 2.7% below forecasts, 0.9% in July. Crypto today. Bitcoin steadies above $114,000. Ethereum extends rally as XRP consolidates.
Yen is underperforming on political developments. Scotiabank.
Oil prices fall nearly 1% on oversupply and weaker U.S. demand.
Gold dips as traders await US CPI data amidst Fed rate cut speculation.
Hey, isn't it cool to know things? Yeah. Anyways, so that's that. That happened. Hey, whatever. I mean, at least we know, and we know how to do it. So ECB did exactly what they told us they were going to do in their database. Great. So let's go back to the fundamentals and let's just take a closer look at CPI past and present so that maybe we can understand whatever the number, the context of CPI, whether it's high, low, or neutral, we should still understand the context of what it means in the real world. Like, it's going to create short-term volatility probably no matter what. Oh, it's good, but it's too good. Oh, no, it's bad, but too bad. Or it's bad, but bad is good. Or in this case, it's so good, it's bad. Oh, dude, seriously? We call that volatility. Cool. So that's that. I want dollar weakness, by the way. That's that. So I think to get CPI, and dollar weakness. How about this? If to get dollar weakness, which is what I want, which I think everybody wants, we're going to need a not red hot CPI. So as expected or lower would probably, since I don't know, but probably give me the outcome I favor. But in that case, even if dollar got strong, and let's say euro dollar dropped like a ton of bricks, I'm still looking to buy. You're like, oh no, Wayne, you're wrong. The number came out low and the dollar strengthened. Euro dollar dropped 50 pips. Good. Good. Because I'm a buyer. And bulls buy red candles. Amateurs don't figure this out until it's too late. This is why most amateurs probably run out of money and give up. They buy green candles. No. Bulls buy red candles, son. You're like, wait, what? Uh-huh. Yeah. So, great. So let's say it drops for 3 hours. So what? I'm going to own it for 3 more months. So by all means, drop for 3 hours so I can buy it cheap. Cool. I don't want to trade the ball. I want to trade the trend. So last chance to do the poll. Will US CPI be as expected, lower than expected, right? Or higher than expected? Last chance. We only have 59 votes. Pop in your poll. Pop in your answer to the poll. Don't worry. It's anonymous. Nobody's going to laugh at your face. They're just going to laugh at you behind your back. It's okay. That's the problem, right? Nobody actually likes the truth, but all right. 67. Come on. 68. Come on. Let's get 70. Two more. This is my Jerry Seinfeld impression, right? What's the deal with CPI? 70. All right. There we go. Higher than expected is the winner chicken dinner. I hope not, but you're probably right. But the thing is, I think durable goods will be higher in the subcomponent. I think services are going to be higher. But ultimately, energy is going to be lower and probably come out as expected or about as expected. That's my thought, anyways. Yeah. All right, so let's do some research. Okay. And see how you got to that conclusion. Okay, there's inflation in our world. What do you think of that? It's pretty, isn't it? Oh, so pretty. Okay, there's the history. Okay, so you can see some of our economies are getting above average. So if this is a variance, and okay, this is a variance, and then this is a variance, and then this is a variance. Okay. Then the next thing we want to measure is the average. And so it looks like if I were to eyeball the average, it's about here. And so now we have and then if you take the average of this of this distance, okay, and the average of this distance, and the average of this distance, and the average of that distance, okay, then you have an average variance. Then you do the standard deviation. The square root of the variance is equal to the standard deviation. So you standardize this. So one way to kind of just think of what I just did is one standard deviation, above and below. So you can see inflation in the world right now is getting too hot. This drifting from 2 to 3 is okay, but if it's higher than that, it's bad. Okay. Okay. Cool. We can zoom in a little bit so we don't have to do such of a historical analysis. Okay, some CPIs have already come out, others have not, so we can get the June, July kind of numbers. Some are pushing 4, U.S. is pushing 3. You know, some of these economies are smoking hot. Yeah, 3 in Japan. Canada is down, but they're choking. So you're like, huh, okay. So if we maintain this level of under 3, I think we'll be fine. We want it closer to 2.75 or 2.5. But if this number comes out 3.0, 3.1, 3.2, 3.3, this is year over year, right? The dollar gets strong. If it comes out anywhere near 2 and 2.75, we'll be okay. Nothing will change. If it's low, oh yeah, that October is in play and dollar weakens. So we want near, close to expected is probably good enough. So let's say it comes, we expect 2.75 and it comes out 2.8. Good enough. 2.85. That's fine. We'll deal with it. 2.9. 3.0. Right? Just psychologically. So 3.0 or and above. Okay? That's bad. Dollar gets strong. As a means, it's not that people are buying dollar. They're getting out of the dollar short trades. And that's what the COT is all about. And we do this every week. We review twice the COT report. I do. So does Maida. So anyway, so roughly this will be perfectly fine. Lowers, game on. Oh my goodness. So 2/3 of the possibilities as expected or lower will give you dollar weakness. Anything near or above 3, dollar strength. That's what I think. But you know what I think doesn't matter. It's not what you think, it's what you can prove. You guys having fun today?
ECB nudges up 20 hours to 25 and 2026 inflation forecasts. Trims 2027. Euro slips. Breaking. ECB leaves key rates unchanged in September as anticipated.
2 minutes.
Eurozone ECB rate on deposit facility meets forecasts 2%. Eurozone ECB main refinancing operations rate meets forecasts 2.15%. ECB leaves key interest rates unchanged in September.
Thanks for clicking the thumbs up button. I appreciate it.
Silver price forecast. Silver US dollar consolidates near $41 ahead of US CPI. The US dollar is modestly higher. US yields are higher and stocks are higher ahead of CPI.
OPEC sticks to oil demand forecasts, says economy doing well. Dow Jones, DJIA, technical, poised for a potential bullish breakout as U.S. CPI looms.
Brazil retail sales, MOM, in line with forecasts, 0.3% in July.
1 minute. Well, it's actually 1 minute to the countdown. But anyway, so thank you for clicking the thumbs up button. And I hope you're enjoying our analysis with the TRADARS platform. Just so you know, our execution is through Traders Way. We also have another execution partner for those that are in the United States. So the general strategy with that is, guess what? You trade through us and you get some of your spread back. So you trade through us using our execution partners. Your trades are a little bit cheaper. Yeah. The other thing I want to do is give you an MT4 account with my charts, my templates, all that kind of stuff. So everything you see on my stuff is what you get. Great. What, my internet's slow now? only, only when the news is coming out. You're kidding me.
ECB nudges up 20 hours to 20.
There we go. Here we go. Here we go. Here we go. CPI, CPI. You got so many different versions. 2.9, as expected. It's high, but it's okay. It's high, but it's okay. Yeah, 2.9. 2.9. It's high, but it's okay. Yeah. Yeah, it's okay. That's fine. It didn't go up. Okay? That is the thing. It did not go up. People are worried about it going up, but it didn't go up. So not up is good. Oh, thank you, David. Yeah, claims 263? Really? Shut the back door, hey? Thanks, huh? 263? Really? Wow. Our average is 229 for the quarter. 229. We got 263. Whoa. Whoa. Hey now. We haven't had a number like that for a while. 263? Oh my God. I've gone back to 2019. We haven't had 263. How far back can I go? That's it. Wow, we've never had a 263. Oh, that's good. Why is this good? So many people lost their jobs. It's the ugliest week for over 5 years, over 6 years. It's the ugliest week. Why is that good? That puts October on the table. That's that. That puts October is way more important. I think that's way more important than CBI. Whoa, whoa, hey now. Okay, so Fed watch tool. By the way, I'm embedding this, or not embedding it. I'm building it inside of TRADARS so that you have your own. Okay, watch this likely to change. Not big. The CPI didn't hurt it, but that weekly claim that that David posted, again, thank you, Mr. Pegler, is the key piece of news. So if that's the case, I would assume this distribution changes it, right? The kurtosis changes. So you have a skew that looks like this. And more likely, it's going to look like this. Oops. Well, that's my mouse at the end. The point that I'm trying to make is, okay, we have a shift from this way in the shape of the distribution. And that change in skew or kurtosis, which measures the steepness of the tail here, of going from shallow to higher. Obviously, I'm exaggerating here, but whatever. That shift will lead to U.S. dollar weakness. Now, Richard brings up a point that we talked about a few days ago, right? Brings up the stagflation. And I'm already positioned for that. So if that happens, I should be fine. because that was a likely outcome. In fact, we talked about it, right? So the next piece of stagflation, Richard, is GDP falling below 2.9. Right now we're at 3.3. Can we sustain 3.3? I don't think so. So if GDP falls to 2.5, which is still a good number, okay? Okay. So you want to watch this. This tells you what banks are doing. Okay. And so watch it go from 8. So I'll show you how to do this. I'll give you the link if you want. But what you want to look at is moving. So it's actually moving down from yesterday. So we went from 9 to 8. So the opposite was happening up until now, in which the dollar strengthened. So now if it goes back to 9 or 10 or 15 or 20, okay, that should weaken the dollar. Or the other thing you should be watching is really, this is the October. This is the October meeting. This is what I'm saying, like suddenly this becomes a live meeting. So you want to look at this distribution here of 375 to 4. Okay. Yesterday it was higher. Now it's a little lower. But throughout the day, if it moves back up, that's also dollar weakness because the distribution will change. Okay. So in a similar fashion, this is a much more normal distribution. Okay. What'll happen is this will fall, this will go up, and this will probably go up a little. So you'll get about the same, and then you'll get a higher peak, and then you'll get a thinner right tail. The tails are the measure of kurtosis. Okay. So this is something that you want to pay attention to. So this tail's not likely to change much. This is likely to change a lot more. See this move here? And this is going to stay about the same, but what you're doing is you're saying this normal distribution is getting steeper, okay, and shallow to the right. That's the skew. And what that means is US dollar weakness. Yeah, see? That's what I'm talking about. Easy peasy lemon squeezy. So I'll give you the link to the kurtosis so you can study that. And I'll give you the link to the CME group. So you should be able to do that in your mind. Cool. Nice. What a day. Crushing. Yeah. So what I was talking about before is if CPI came out big, and people still might be trading in the CPI number when I'm like, well, whatever, dude, that doesn't matter. The jobs number mattered. But what I said is if it came out big, like 3.0, 3.1, then there are traders that are already short the US dollar. And they would need to buy those short trades back to get out of them because they realize they're wrong. Inflation's too high. The Fed can't cut that many times. So to get out of their shorts, they have to buy the dollar. But they're not buying the dollar. They're buying out of their short. And so we track this every Friday at I think Meta's discussions are at 5 or 6 on Fridays. I cover it again on Mondays. So that, but so what we'll do is we'll look at, so I can obviously sort this. Here's the dollar. Okay. All right. So what you look at is dollar might be going up or down. You can see here the market is 58% short the US dollar. That's the stock, the capital stock. How many bulls? How many bears? What's the net position? The market is 60-40 in favor of bears. Okay, great. I'm a bear, by the way. I told you. Great. I said if it got strong today and euro dollar dropped 50 pips, I'd be happy. So I could buy the euro dollar and short the dollar. I'm in the short camp. But what I'm talking about is flow. And so you can tell if dollar got strong, it could just be people exiting shorts. Not necessarily people buying new longs. So you see this, that's bullish for the US dollar. Less bears is bullish. And sometimes what you see is like almost nothing happens on the long. Huge change in the short positions exiting. And then you go to like a dollar chart and the dollar appears strong in this case. You're like, oh my God, look at euro dollar down, pound dollar down, Aussie dollar down, USD CAD up. Oh my gosh, everybody's buying dollar. And then you find out nobody bought dollar. You see that? Right? Cool. So all these patterns that we have on our technical radars for Forex, I'll turn everything on. All Forex, all crypto, all stocks. Yeah. Okay? All commodities, all stock indices, all patterns. Here's the thing. These are patterns that have been in play for hours or days. So with the new news, I would suspect a lot of these patterns are going to be threatened because the market's not moving technically, it's moving fundamentally. Right? So those patterns are likely to change. So here's my Traders Way account. WTI coming down. I'm a bear. Remember, I don't have an opinion. I only have facts. One of the facts that I have is tapping into the EIA.gov database and have a government projection of a price lower than where we are now, going out 18 months. Oh. I can't predict the future, but I have facts. Okay. Gold going back up. Notice how we got caught on the mean. Yeah. So I also have this chart set up bullishly. So the way I would interpret this over the next few hours is that we've printed a low, which is a technical thing, but fundamentally we want up based on this news. Okay, great. So now on this hourly chart, we want to drop into smaller time frames. What we're hoping to get is something like this. And by the end of the day, we're sort of in this at $3,669.43.5 ish. You know, we like to be kind of vague. You know, somewhere around $3,669.43.5. The ultimate goal is $3,678.44 because a penny is not, we don't round to the penny. That's so amateur. A penny, that's like 100 pips. You can't just round to that. So anyways, that's how we do. That's how we do. So now it's just like, let the vol happen. So I'll tell you, here's what I was saying before. So I'm a bear on US dollar, which means gold up. I'm a bull on gold, which means gold up. But I said, look, the way that I would trade is if I'm a dollar bear and the dollar got strong on the news, I let something like euro dollar drop, or let's say gold dollar drop, and then I wait for it to hit support and turn bullish again. I get back in. So I'm just waiting. Now, everybody here on the flip side was a bear, and they did precisely the same thing. What you should learn from this is how institutional traders trade. Gold goes up, but they're bears. They're like, great, look at that huge green candle. Sell, sell, sell. Are they right? Nobody knows. But on the flip side, if I'm a bull and I get a huge red candle, I'm like, yeah! And I buy it. Amateurs chase, and this is why it doesn't work, because it turns green and they buy it and they lose. Or it turns red and they sell it and they lose. That's not how you trade. This was predestined. We call that trade plan. So let me show you the bearish point of view. I'm going to put a sell zone on here, and the color of this sell zone will be pink. And this is using nothing but mathematics. In fact, it's implied volatility. You ready? So I go to template. No, I want to change the indicator. Indicator, biased pivots. Biased. Okay, so if I were a bear and I were to marry, okay, if I were a bear, show me that today's sell zone. There it is. What? So somebody said, okay, I don't care what the heck happens during CPI, but if it pops, I'm going to take a shot somewhere around 36, 38, and whatever this is. We've known that all day. And bears have been selling it since yesterday. Look at sell, 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 sell. And then Asia Open, look at that. They sold it precisely the right. Okay. And then London Open, they sold it again. Then, you know, the news in New York, they sold it again. Are there sellers of gold? Oh, yeah. Do they know what they're doing? For sure. I know what they're doing. They know what they're doing. But if you're chasing price, you're like, oh, buy, sell, 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 buy, up and down, up, whatever, dude. You're like a chicken with its head cut off, making a bloody mess of everything. But if you know how to trade, it's logical. Let me show you the bullish point of view. And I want you to look at this period and this period. And imagine you were already a bull for fundamental reasons. You were a bull a week ago, you were a bull a month ago. So you're only looking for bullish opportunities, right? So you have to have that mindset to begin with. So you're looking to buy because you're a bull and you want your daily trade plan, right? You guys like day trading? I love day trading. So how do you day trade gold, Wayne? Well, are you a bull or a bear? I don't know. Well, then you've already lost all your money. You might as well just quit. That's not even a joke. You don't know if you should be a bull or a bear today? Quit. Stop wasting your time. You can blow your money, whatever. Okay? But why don't you just succeed? Why don't you know? Let's just teach you that. Okay, good. So you're like, Wayne, I have done the research. Or I used TRADARS, and TRADARS looked at 18 different variables and said, you should be very bullish on gold. Oh, well, that's what I do. Plus, I have my Harvard brain. But nonetheless, I'm a bull. Great. So let's give me, hey, TRADARS, give me not bearish, but bullish day trading plans. You ready? Cool. Guess what? Here's what they were. On Monday, buy here. Tuesday, buy here. Wednesday, buy here. Thursday, buy here. You're like, that one didn't work. Well, you probably got stopped out. Now you're cautious. Yeah, good. But tomorrow's trade plan looks like this, which is kind of the price you're at now. Huh. Well, hell's bells. So do that part again, Wayne, where I'm fundamentally bullish and I want to know where to buy. Okay. Buy here, 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 buy here, 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 and buy here. Look, there's a shape to it. So we're not in a good situation. I'm hoping the consolidation was just based around the CPI news and that we eventually get a breakout. But that's the theory part. That's just implied volatility. Those are just pivot points. No specific my bias pivot points and my calculation. But whatever. The thing is, you woke up in the morning and you're like, I want to buy gold. Why? Well, because I looked at 18 different variables of macroeconomics and seasonality and technical charts, and I'm a bull. Sweet. I'm with you. Great. Then you go to your chart and it just says, well, using Wayne's bias pivots, I now know my probable buying price. I just don't know the time. I know the price, but I don't know the time. The price is on the right, time is on the left. So the time, yeah, we don't know. But the price, of course you know. If you're a bull, you don't know the price to buy? Really? You're that confused? Oh my God, let's fix that. It's just how to trade properly. You're like, I'm a bull. Good. What price do you plan on buying it? You should know that definitively to the fraction of a penny. Cool. So let's do it. You ready? Going back to August 20th. And remember, that was the day we went, from conservative to aggressive. Literally from bullish to very bullish. Literally. Okay, you ready? Up, 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 down, down, buy. 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 Up, 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 down, 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 down. Oh, that's different. Up, up, down, 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 down. Up. So are we consolidating? Are we reversing? Is this a flag pattern? Well, we don't know. So you're going to need to think about it. A flag, kind of like this, would indicate what I just drew. Now that's charts only. But remember, before you even looked at this chart, you were a bull. Once again, I can prove that to you quantitatively. And this is the key to success, by the way. The key to success, and the way I first started trading, before I even opened up my charts, I knew what I wanted to buy and sell. And I knew everything to ignore, which was almost everything. Okay, that's how I started. When I first started trading 20-something years ago, I was quantitative. I didn't quite know it then, but remember, technical analysis was brand new. So I would do all my calculations on an Excel spreadsheet. Here's August 20th. I just showed you. And this day we went from bullish to very bullish. And I just showed you what the charts did. You're like, wait, Wayne, I could look at our quantitative score of logic based on interest rates, jobs, inflation, GDP, the technical charts, seasonality, retail positioning, institutional positioning. I can look at all of this and then make a fundamental bias based on logic. And then I can go to my charts already knowing if I'm a bull or a bear. And from there, I can use concise technical analysis. Yes, that's exactly what I'm saying. So when somebody says, Wayne, what do you think about EuroCAD? That's what I think about EuroCAD. What do you think about EuroCAD? Kind of looks like a buy a dip scenario, maybe, huh? Oh, people were disappointed because the ECB didn't cut interest rates. They're disappointed because they don't do the research. I knew exactly what the ECB was going to do. You see the difference in the level of confidence? I don't think that's arrogance. There's ego and egotism. Egotism is arrogance. You have an unfounded confidence. Huh? You're like, oh, that was easy. I'm going to fight Mike Tyson. Yeah, wait till he hits you in the stomach. Yeah, your confidence just went away. And then he's going to hit you in the jaw. Sleepy time. So I think since I have the data, and the ECB told me months ago they're not going to cut, then I'm confident they're not going to cut because they have already told me. Now, there's a small chance they change their mind, but I have the data. So I think it's a founded confidence. And that's ego. That's the strength to get up and do what needs to get done. Harvard calls it veritas. You're illuminate. Veritas is the truth because you know, you have knowledge. Truth through knowledge. TRADARS helps you know the truth. And everything else is guessing. So does it help? Well, I don't know. You're either amazed or, we look at things differently, huh? Here's treasury yields. Yeah. Sweet. Treasury yields. Yeah, this is going my way. I love it. Euro dollar, what do you stink? Yeah, it was pretty good before, but okay. Yeah. Almost none of this is technical analysis, by the way. You see, is that technical analysis? No. 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 Is that technical analysis? Yes. Is that technical analysis? No. Is that technical analysis? No. Is that technical analysis? No. All of this starts with fundamentals. So we got an ECB meeting now, so you're going to get some choppiness and all that kind of stuff. Why don't we call it a day? What a great day. Thank you for your time and attention. Please click the thumbs up button. Tell YouTube this was awesome. Come to TRADARS. Okay. Join the community. It's not just a technical analytics platform, but it includes performance coaching. Right? Here's our team. Just pretty kick butt. So swing on by, man. Right? You want to take another quick peek at what we got? Yeah. But it's all the data in the world and a kick-ass team. Yeah. So, peace on earth. May the pips be with you. May your profits be above average. And also, by the way, if you trade through us, through our execution partners, your spread gets narrowed. Is that good? Yeah. Cool.